you can only lose so many flips before you might want to start working on, getting a little bit more educated on
Well,
whatever topic.
listen, I mean, if it makes you feel better that, you win every flip, I'll give that to you. I just want you to be in a good mood, Dan. Okay.
Yeah, that's all it takes. All I got to be told is that I'm the best and that I win everything, and I will perpetually be a happy guy. So my ego requires no stroking whatsoever.
Founder and CEO of More Insights and Strategy, Patrick Moorhead.
6, 5.
CEO of the Futurum Group,
Daniel Newman.
6, 5.
You know a lot about what's going on, Moorhead?
I think we do.
You think we do, Moorhead?
I cringe every
time.
time I hear that. We might have to change that. Of course, we know
I
what
know
we're
what I'm
talking
talking
about
about.
here.
Of course, you know what you're talking about. That's why you are the man, the myth, the legend that is Patrick Moorhead. Hey, everybody, welcome to 6-5. It's the weekly show, episode 260. It's been a banger of a week. If you hear a little hoarseness in my voice, it's because I woke up not feeling so good. Weird, I got sick twice in 3 weeks. Yeah, I 2 red eyes in a week. It's just I'm old now, Pat. I'm an old, crotchety, miserable son of a bee that needs to sleep. And when I don't sleep, apparently my body starts to fight with me. But at least I made it through all the travel. I made it through all the travel. I felt fine. It's Friday. We're going to be great. And it's a great show. Of course, you're listening to this. It may be Monday, maybe Tuesday, but overall, just want to say thank you, everybody, for tuning in. Before I kind of run through the docket, talk about what we're going to talk about today and dive into some other news. Pat, how are you doing today? Let me guess. You crushed it in the gym. You're smashing a protein shake right now, and you're doing a full side flex for everybody out there that's watching this on video.
So here's where I'm at. So I'm 2.5 months into a shoulder rehab. I got to get surgery on an inguinal hernia, but I am moving forward. Okay. And I'm finally moving up the weights on bench press, getting back straight there. Had 4 good workouts this week. So yeah, I'm feeling really good. And the rest of my life or something else can be going crappy, but I knock out some great workouts. Even though my HR is abnormally low, I'm still in a great mood. And yes, thank you for the reminder. I do need to pound this protein drink.
It's become like a normal in the show now. You come here a little sweaty, all worked out and buff, and then you're pounding protein. And by the way, that stuff tastes like absolute garbage.
This is OWYN, not a plug. Only what you need. Has all 9 essential amino acids, BCAAs, Dan, all the stuff that you tell me is.
They should sponsor you, and they should also tell you that it actually tastes like you're chewing a tree. So as long as you don't mind that, it's great.
I mean, it's unlike Fairlife where you are actually eating tree gum, Dan.
Yeah, but it's super tasty.
I saw you pound one of those last night on the plane.
Yeah. I mean, I was thirsty. I needed some protein, and it was so tasty. It tasted just like chocolate milk, like from the carton when I was a kid. Best stuff ever. Like, I mean, look, we only live once. So we got a great show, a lot to cover. We'll hit this in the Decode, the show, new format. We got the Decode with the news. We've got the flip where I beat Patrick in a debate on anything. Doesn't matter what it is. And then we hit the Bulls and Bears where we talk about what's going on in the markets. And we will do all that today. But before we do that, we got to do the plug because it is only a month now, a little over a month away from the 6-5 Summit 2025. It's 4 days. It's like 1,000 sessions. No, it's like 50 plus sessions. We've got CEO of Dell, Chairman Michael Dell, kicking it off. But we actually are building a heck of a lineup. There will be a lot more previewing of that coming up over the next few weeks. We hope that everybody, though, is registering for the event. 65media.com/summit. We're going to cover AI, but it's going to be so much more. And as you know, we've had some of the biggest names in tech over the years. It's been Jensen Huang. It's been Bill McDermott. It's been Lisa Su from AMD. It's been, you kind of go down the list. You name who's who of technology. They've been at our event. It will be that way again this year. Plus, you get a whole lot of Pat and a little bit of Dan. You really just want Pat. And, that's just kind of how it goes. But Pat, you excited for the summit? You ready? You gonna tune in 4 days straight?
I'm going to sit there and watch every single video I did not participate in. So how about
Well,
that?
you got to do that to keep up. You
Exactly.
got to do that to keep up. You got to know what's going on because these you can only lose so many flips before you might want to start working on getting a little bit more educated on
No,
whatever topic.
listen, I mean, if it makes you feel better that, you win every flip, I'll give that to you. I just want you to be in a good mood, Dan. Okay.
Yeah, that's all it takes. All I got to be told is that I'm the best and that I win everything, and I will perpetually be a happy guy. So my ego requires no stroking whatsoever. All right, buddy, we've got a big show. It's been coast to coast this week, at least for me. I was at Milken, I'm Boston IBM Think and ServiceNow. Pat, you planted in Vegas for like 4 days, worked out, great exercise, great sleep, great meals. I'm super jealous of you. We're going to talk a lot about what happened this week at these different events. But we had ServiceNow Knowledge, we had IBM Think. There was some big news in the economy and trade and tariffs and what's going on there. So we'll get a little bit into that. And then we'll get through the rest of the docket. But Pat, let's just get right after it now. You spent a lot of time in Vegas at Knowledge, and like that place was so crowded. I have to say, maybe Bill McDermott and the ServiceNow team is right. The world does work with ServiceNow.
Yeah, this is my second Knowledge. We opened up a SaaS practice 6 years ago, and we just dove in. I hired a bunch of people, but this was just my second. And I have to tell you, the talk track for senior executives was absolutely spot on. And I refer to this as enterprise AI nirvana. And well, what the heck does that mean, right? It means essentially, any model, any cloud, any workflow, any vertical, any data with connectors to everything, you name it, right? So I love the vision. I think that the difference between this year and last year was they increased what I call the reality bits. Okay, they put more meat on the bone. And the other thing that I thought was positive was that on the second slide that was shown in the entire keynote was about saving money. Right, so many times we go to these shows and it's like, save the world with AI, do this, transform. Okay. And sometimes that just initiates a gag reflex. Okay. But I love, they went right at like, use ServiceNow to save money. Okay. I love that. And the other thing that I saw was this realization that to be able to afford this technology, enterprises are going to have to dial down some of the other software expenditures that they're making. Like no longer are we talking about, hey, there's a huge payoff, you're going to spend more. The realization has set in, and there was a lot of talk about ServiceNow customers wanting their CRM, ERP, HCM provider to not do well so they could give ServiceNow more money. Now, I didn't talk to a customer who actually said it, but I've got to take Bill at its word. Final thought here. Here's where I think the company is going to have to work really hard at. It came off as this is easy, right? You're just go workflow by workflow. The thing about it is you connect this many workflows, it turns into kind of spaghetti, right? And you're probably going to have to change the way that you do data integration. You're probably going to have to change, do some boil the ocean that requires GSIs, and so I think they've got the providers in that. Behind closed doors, there was the candor, which I appreciated, but what they're going to need is a customers telling their stories, right? Customer stories, 1-pagers, 10-page customer case studies are great, but start off with the stories, right? And then TCO studies. And once ServiceNow customers see other customers diving in, and they did have AstraZeneca and Aptiv on stage. Aptiv, by the way, is a software company. Okay, so I don't count them as being your classic enterprise. AstraZeneca was, but anyways, this is what they're going to have to work on to make this real. Because I think everybody, CEOs love this, so do CXOs, but I think they're probably going to lose some people at the enterprise IT level.
Yeah. So, are you giving them like an agenda of things they can buy from you?
Well, they can buy them from me, or they
Okay.
can even
I was
buy
just
them
checking.
from you. I'm sure you didn't do any selling at the event, Dan.
I'm not self-interested. Remember, all I got to be told is that I'm the best and that I win everything. The bottom, so listen, this is a company that has been in a massive positive transition. It was a company that really owned the CIO and the IT department for a long time in IT service management, and it's evolved to basically wanting to be the boardroom and the key decision in how companies are going to unravel the complexities of AI and abstract away all these layers. Remember Satya talked about all these applications becoming CRUD databases. Well, ServiceNow is kind of raising its hand and saying, we want to be a single pane of glass, a single abstraction that can build workflows that can run across all your applications. So whether it's SAP, Oracle, Workday, Salesforce, they don't care. We're basically going to we're going to workflow it. You're going to talk to a single pane and a single abstraction. You're going to be able to, ask it a question. It's going to be able to have agents deployed. I mean, this is the narrative. This is the story. This stuff doesn't work that easy. It's not like that easy to do. If it was, we would have already seen all of those different softwares abstracted away. But having said that, that's why they're going from an IT deeply entrenched company that really served that IT buyer to a company that's really changing its whole tone and tenor to serving the boardroom. One of the biggest conflicts I see is in the whole, in this whole software industrial complex is we've really built an era where the IT people that run these different softwares become super sticky inside these enterprises. I'm the VMware person. I'm the Salesforce person. I'm the SAP person. And we can't possibly function without this because they've built an entire ecosystem. So it's kind of an interesting juxtaposition that these companies are in right now, because basically ServiceNow is saying, look, we can use agents. We can workflow all this away. You will need less software. These become more databases. It becomes super seamless. But that'll only work if it's sold top down. And that's where the money savings come in. That's where less chair swivels come in. So it's a really interesting position, Pat, because like my take is I think ServiceNow and actually the next company we'll talk about, IBM, are in these really interesting moments to basically win in this agent space because they're not necessarily a single application and they're not necessarily a single cloud. Having said that, at the same time, though, there's a lot of stickiness in how these different technologies have manifested inside these enterprises.
They're going for the brass ring here, Dan. ServiceNow, from an east to west, and then getting into things like CRM. They're absolutely going for it. And they've got the funding and the growth to do it. How many enterprise SaaS companies are doing double-digit growth? There's pockets of double-digit growth like Oracle ERP, but you've got Salesforce at single digit, you've got SAP at single digit, you've got IBM, who's primarily a software company, growing single digits. Anything double digit is just shows acceleration.
Yeah, they're like rule of 50 plus at ServiceNow, and we've seen most of the big SaaS companies. I think we are heading to an era where SaaS, as we know it, the consumption model, the spend model, it's all going to change meaningfully. I think ServiceNow is in a good position, but there is a lot of technical debt and sort of histrionics of how software has been sold into enterprises that will need to be unwound to take us to that next place. So let's jump over to IBM. So I know it was so difficult, and let me just tell you, Boston to Vegas is about as far away as you can get. I did make it up for the day. I got the chance to spend some time with, the Ferrari team principal. That was pretty fun. Fred and I are buddies now. Fred, I'll send you another message.
You're a Ferrari guy now.
I'm not a Ferrari guy. I'm a McLaren guy. I actually told him that. There's a really funny picture of me. They took a picture as I told him that, and we're both laughing about it. He admitted that we have a better car. He was pretty straightforward about it. But but got to spend some time on that. But also was there to catch up. What's going on? What's the news? What's the story? IBM is in a phase of really meaningful growth around its generative AI business. We've seen, you and I have talked every quarter to Jim Cavanaugh. We talk regularly with Arvind Krishna, their CEO, and they're building a multi-billion-dollar, fast-paced run rate growth business around AI. Now, up front, a lot of their growth has come from being a leading consulting company. Sometimes people forget that. But they were the first, Pat, and you remember this with, Watson X, to build this sort of fully governed data AI platform for generative.
That's right, man.
And now they're really turning
first to GA, man.
First to GA. And by the way, don't get a lot of credit for it at times, but really built a platform that can be embraced. And this is something I appreciate about IBM is, whether it's Red Hat, whether it's Terraform, whether it's Hashi, whether it's what they're doing with Watson X and their now Orchestrate platform, is IBM is really a middleware layer. They really are a middleware for all of these sort of innovations that are going on. And if they can get that messaging right, I think they sit in a really good position to say, hey, because this kind of goes back to the same reason I think ServiceNow has a great story, Pat, is like, look, do you want to do all your agentic with a single application? Meaning whether it's your CRM or your ERP or your HCM, do you want to start there and build your agent workflow? Do you want to start with a single cloud, where most of the clouds are designed to not necessarily work optimally together? Or do you want to start with a company that's totally agnostic to it? And I mean, look, I think you and I are capable of making the case for any of those three things, and more than, that's the debate that Salesforce is going to have. That's a debate that Google's going to have. That's a debate that IBM is going to have. But if IBM is anything, it's uniquely positioned to be the orchestration layer for agents. You think about VLLM, Red Hat, their Orchestrate layer, like they can really be the company that says, look, we don't care what cloud you're using. We don't care what applications you're running. Build your agents with us. And that, by the way, was like the big takeaway. I mean, they announced their new Linux One. We're going to do some work in our lab with that and tell some stories about that in the next couple of months. That was really great. They definitely did some evolution to platform. They built it. They launched their new Tiny model, Granite 4 Tiny. But really, to me, what I walked away with, Pat, is agents. Is IBM was early with their platform for Watson X, and then we're a little later coming out the gate talking about agents. But Orchestrate's a multi-year-old platform that really could help companies figure out how to deploy agents across their enterprise ecosystem.
Yeah, I didn't attend the event, but I did spend 4 hours kind of researching what was said. And I think their message is a good one, which is essentially, okay, you've done these science projects and POCs. Now, how do you operationalize this at scale? How do you integrate? How do you orchestrate with the right degrees of security and compliance? And then how do you get to all that data, right? That is exactly what they need to be saying. Interestingly enough, I thought they went. This was a CIO message versus a CEO message, like we saw at ServiceNow. But what IBM is doing is they're pouring this incredible amount of money into platforms that all of the biggest, like the Mag 7, are covering here. So, for instance, Watson X.data, right? The equivalent for Microsoft is Microsoft Fabric, right? Watson Orchestrate and Agent Catalog, that's Microsoft Copilot Studio, right? Storage, context-aware storage, which is essentially a lot of the compressing the software stack that people like Vast Data get credit for, right? Them buying data stacks, right, which is a very serious player when it comes to unstructured data handling. One of the things that does distinguish IBM here is that their software, and they don't talk about this a lot. Dan, you can run their software on-prem on x86 servers. You can run their software in the public cloud on x86 servers, and then you can have a complete solution with Linux, IBM Linux One, right? Where it's one contiguous stack. And as far as I know, they're the only company with a full stack of an AI stack that you could run on premises. I think the other differentiator is obviously security and compliance, right? Hence the type of customers they attract. The one question I have, just this nagging question though, is new logos. I'm not saying to succeed, IBM needs new logos. They just need to capture a higher market share of who they have. But to me, getting new logos with new companies, what it does is it increases credibility that IBM has the juice. And that's not something that I have seen. It could be just that I didn't research it effectively enough, but it provides credibility. You know, these public cloud companies show up with these new AI customers, and I think it gives them a lot of credibility. And IBM is sometimes looked at as a legacy brand, a legacy tech brand, even with all the work that Arvind and crew has done with the acquisition of Red Hat, with spinning off low growth stuff that doesn't get looked at like technology a lot. But I think
Well,
that's
1% growth will never thrill the market and create a ton of excitement.
yeah,
But
yeah,
I mean, they did model 5. They're modeling 5,
yeah.
which, is not that far off from a SaaS company anymore.
No, you're exactly right. I think that's a great point. I think what I want to see though is I want to see new logos that hadn't done a lot with IBM before, that aren't necessarily in this hyper regulated and what's considered slow industries. I think that would help them a lot and make a lot more believers out of people.
Yeah, I would agree. The challenge is to create sort of that sexy fast growth story. But I think they're also, sort of underappreciated at times. They've been a very reliable company, performant. They did well when sort of the market was much less stable. They return a lot of cash to shareholders, a lot of discipline in their operating side. The technology works pretty well, and I mean they do have a massive enterprise client. Pat, the first two companies we talked about here go thematic with what I have said is like, look, whether we have a downturn, we're going to talk a little bit about their first trade deal in a minute, but if tariffs cause a recession, enterprise AI to me is still the most bullish area of focus. Like Arvind said from the stage, 99% of enterprise data has not been touched by AI yet. Now we could argue a lot of data, things on tape and in old storage, isn't all that useful. There's a lot of weight that goes to recency and such, but like enterprise AI and companies using operating leverage to create scale, we're going to see efficiencies driven into businesses. I think this is where dollars will flow, even if the overall economy takes a hit, which I'm increasingly thinking may not actually happen. So, I mean, look, this week we got a first deal unveiled, a very big, very, very big, very important deal with a very sophisticated and important country. I'm trying to think of if that was kind of how it was portrayed. We had heard that framework had been done, but Pat, the UK and the US announced a trade deal. Are we off? Are we good? Everything's going forward now. No more worries.
So I had to research this one a lot more than I needed to. I mean, the postcard said "slam dunk." We've got this, right? Mission accomplished in George Bush style, right? And then add 10 years of war to that after the aircraft carrier. This is not a full deal. This is an incomplete deal, and what I would say, it's a good start. Okay, so first of all, U.S. agreed to reduce tariffs on $100,000 cars from 25% to 10. Okay, the U.S. reduced it on steel and aluminum, and there was reciprocal for ag exports. So that's like beef and wheat and soybeans, right? But what wasn't agreed to was, first of all, there's no removal of the 10% baseline tariff. Okay. UK didn't lower their food standards. And quite frankly, I'm glad they didn't, because the type of food that Ag Inc. pumps out is garbage. I'm glad they stood their ground on that. It wasn't a free trade agreement. There's still tariffs and there's still limitations going back and forth. Now, for tech, I think the most important thing is they didn't roll back the services tax that they put on the U.S. So, for instance, like Azure, GCP, and stuff like that. I did a little digging too into the trade balance, and this is going to be an interesting from a good standpoint, meaning stuff that we buy that you can touch and feel. We're actually very similar in numbers, even though we're 10 times the GDP and 3 times the population. Okay, but the interesting part is it's this huge imbalance of services. Okay, like management consulting, financial services, and even telecoms that do business inside of the U.S. That is where the biggest disparity is. So, good start, definitely not complete, and definitely not free trade.
Oh, well, yeah. I mean, look, I don't think we're going to get free trade. I think this is a good start. I think the markets I think we're within a few percent now of being back to where we were heading into Liberation Day overall.
You mean
We'll talk more markets
the
later.
markets?
Yeah. Do we care about anything else? Is there anything else?
I do.
I mean, look, bond yields, dork. The bond yields have, settled a bit. The dollar is kind of back to stasis from where it was at. I was at Milken this week and got to listen to Scott Bessent talk. I mean, look, there's only 2 things they care about. It's the bond market and they care about AI. That's it. So everything else, actually, the market is doing what the market does because ultimately it's starting to see, look, we've been told that the shelves will be empty. I think over the next few weeks, we're going to find out if any of that was true. It doesn't seem to be so far. I know my groceries are still in the store when I need them right now. I think that we are going to get a deal probably with Japan and India, but I don't know if they'll be fully fledged out over the next few weeks. I think the India deal is super critical. I think the UK one, though, is more of a bellwether because Europe keeps playing this kind of hardball. So it's interesting with the UK and how they Brexited, but yet still have kind of this alignment that they went first. Europe kind of keeps throwing these big, we're gonna be all over the US. But look, I think in the end, we're going to find out that this stuff was super interconnected and nobody really had this crazy unique advantage. But the one advantage the US does have is we spend money. We are the consumer. And so when everyone said that, China can play the long game and US can't and this and that, but like the bottom line is China will hurt in time if they can't ship the goods to us. Like, 'cause we're the ones that buy it all. I've already heard that their factories are furloughing and laying people off and they need access to our market. And by the way, President Trump and President Xi Jinping are actually in Switzerland right now meeting. I don't know if I'm not a perma bull on things, but I just think that the doomsayers are going to once again have been wrong. I think we're going to find a balance. I think the UK was a good first example. We got to kind of split out of the decode and get onto the flip. But I was going to just quickly, one last item here in the decode is, so Sam Altman's whole go for profit thing just took a major U-turn this week. They're not going to change the corp to a for profit right now, and I think that makes like 30 of the 40 billion they just raised from SoftBank no longer in play. I think it's pretty crazy, but I wonder if that's the Musk factor. I wonder if it's the way the company was structured. It was too hard to undo. But gosh, it feels like that Ponzi scheme. I know it's not, but that 260 billion valuation. Worth more than Salesforce, worth more than ServiceNow, worth more than, AMD, worth more I don't know, Pat, but it seems like that was pretty bad news.
Listen, the lawyers and financial geniuses will find a way to put this together and have everybody make money. I mean, if this were reality, there would be panic in the streets, right? Everybody who gave money would essentially be losing their money. So yeah, I just think they're going to find another way to become a profit entity, even if it means shutting down the entire company and starting over.
They got to go public. They got to go public. They've got these people invested in now at this $260 billion valuation. How do they get money back on a company that's burning $5 billion a year?
I mean, they can't go public because it has to be a for-profit company.
That's what I mean. They got to, but I'm saying,
Yeah.
so they got to figure out how to do this. They got to figure out how to do this. They can't not do this. So, all right, we're going to head over to the flip. We're going to actually talk a little bit about the reversal of the AI diffusion laws. Everybody got really excited. I think a lot of people got the interpretation of what's happening wrong. But you know what, Pat? There were a lot of people excited that all the people that hate Donald Trump also hated Joe Biden's AI diffusion laws. So let's argue on that one. Let's see whether or not that was a good decision. So you're gonna call out that this was the right thing to do, huh?
Yeah, I don't even know who that guy with the beard is on that flip. So I'm
He was
looking
way
at a different
chubbier,
person.
by the way.
He's
He's a
fat
chubby
and he has a beard. Anyways, we
That's
need to get
nice.
that coin changed. Yeah, so back in January 13th, when this thing came out, I basically said, okay, the U.S. government is going to be the traffic cop by country on how many of these things get sold. Ironically, the website didn't work. And where I'm going here is that anytime you get the government engaged, things are going to come to a screeching halt. I mean, if they can't keep their website up to actually show you what the IFR was, how do we expect them to possibly be the bean counter for how many of these GPUs I can send to Portugal? And I think that the number one, while admirable and we think we can keep tech from diffusing into China, I think it's an absolute pipe dream in the way that we're doing it right now. I mean, based on MGX standards, essentially an NVIDIA GPU is about the same size as this bottle of electrolytes. Okay, so I mean, I could hide this in my backpack on the way. I mean, smuggling these things in. I mean, just look at the on what's going on in the Middle East about how weapons and rockets get into certain countries, and every one of those ships are inspected. I mean, this tech is going to get in. There is actually no way to change this. So by getting rid of this, I think we're just leaning into the realization that we can't keep China from getting this technology. And by the way, and we've discussed this before, even if they do get access to the technology, what that's really doing when you're buying AMD, NVIDIA, and Intel parts, it's locking Chinese into those ecosystems and gives not only the R&D funding to those American companies, but more importantly, it takes the funding away from the Chinese companies like Huawei and the new ones that are creating GPUs. And the challenge there is you get enough momentum behind the Huawei's, and you're going to have this rise of foreign competitors where they have the chance, even though they're not ahead now, right? I would say they're still 2 to 3 years behind. But imagine them catching up where not only is it as performant, they've moved off CUDA, which you can do if you're savvy enough. I mean, the hyperscalers have already moved off CUDA, and they're going.
They're all using CAN.
They're going directly to things like PyTorch. It does take some time, but the U.S. ones have already done this. And do we want something else to crater the markets for AMD and Intel and NVIDIA? I don't think that we want. I mean, AMD was just on Capitol Hill talking about the the importance of calibrating, right, this to balance security and commercial interests. So, Dan, once again, I have put towards a compelling case, and I want to hear what your retort is.
So I'm going to basically take a bit of a different approach to why we need to leave this in place. We already are dealing with enough uncertainty right now. These rules were already baked into the market. The expectation is that we will continue to manage the diffusion of AI technology around the world. And let's be very clear, the Trump administration isn't just repealing and pulling these back and doing nothing. They're going to do it. They're doing an investigation and they're planning to roll out new rules. So for everyone out there that saw this rollback and said, "Oh, great, NVIDIA can sell H20s into China," no, that is not what happened. The import bans or the export bans, I'm sorry, for a number of things to certain places like Iran and Russia and China have not and will not change because of the pullback of these diffusion rules. The bottom line of this is that there was an important multi-tier country classification. And while there may have been some debate on which countries needed to be in, we needed to make sure that, one, with limited capacity resources, that we were getting the right technology into the right hands of the nations that we believe are capable and going to do the right things with the diffusion of this technology. We needed to also make sure that we're very carefully managing our adversaries. I've argued many times before that us selling NVIDIA chips, for instance, into China does not slow down China's resolve or its interest in building its own technology. It's the same thing it did with Huawei and telco infrastructure. Their goal is to make Chinese technology the norm to the world. We want to slow them down at all costs, and we want to make it as difficult as possible for them to get access to the right technologies that would enable them to gain any sort of leadership in the world in this particular category. The world is depending on the West winning. And right now, it's a twofold strategy. Yes, we need to continue innovating at scale, but we need to make sure that instead of more chips being built and specialized for China, that we're building enough chips that OpenAI, Google, and Microsoft, and all the companies that are saying they don't have enough capacity and access are getting access to the chips they need. We also need to understand that we want to be cautious in sharing information. We just saw the Stanford articles that came out about things that were happening on campus with research being taken using force, fear, and other methodologies by students on our most advanced campuses. And the reason is because the U.S. is leading the world in AI research. And despite the volume of AI research that might be coming out of other places, the U.S. is the leader. We need to be careful at how openly we share this. Many CEOs and companies are talking their books. They do want to sell into the China market, but that is not necessarily the best thing for our country, for the long-term economic leadership that AI can support. So these rules need to stay in place a little bit longer. We need to work on certainty. We need to finish our trade deals. We need to make sure that we have the leverage that we need and that we do not let more product end up in markets like China, like Iran, and like Russia through intermediaries. So tighter controls. I mean, let's face it, Pat, they could easily set these things up to phone home and know exactly where they go. I believe there's a reason they don't want to do that. It's because these companies know they still want to sell lots of volume in these markets, whether it's one step, two step, or three step. More rules makes it more difficult at this point in time when it's about global economic and market leadership for the next multiple decades and winning the most important race in our lifetime. Those rules need to be in place. I think they're making a mistake, but hopefully when Trump pulls them back, he puts something else in place to make sure those nations don't get access to technology that can allow them to gain market leadership.
I'm really interested to see how we could actually track this stuff. So first thing is, there's self-regulation, which means, doing a KYC, know your customer. There's this idea of phoning home. There's this idea of putting a GPS chip on every. I mean, just like we see in security, there's a way to circumvent everything. But I just don't think this is regulatable. I think at scale, Daniel, it's regulatable, right? And maybe that's the only thing that matters. Like onesie, twosies of this thing coming over versus 50,000, right? Might make it in. But then again, like how do 50,000 rocket launchers get into Gaza when every ship, every truck, every single thing gets inspected, right?
Look at how absurd it is, though, that you have these things that are basically supercomputers that have network, adapters on them, and they can actually tell you where they are, but we don't know where they are. Come on, we can find every laptop and phone on the planet and can trace it up to a second. We don't know where these GPUs are. Come on, give me a freaking break. It's crazy. Like I said, we could regulate and manage this stuff. It's hard, and like I said, the reason it's hard is because these countries know what's at stake. It's not like, oh, we're using these for a bunch of gaming stuff. They're trying to build they're the Andurils. They're trying to build the robot drone killers of the future. And they're using this technology to do it. And of course, they don't want us to know where all these things are and how they're being used. We have no idea to this date how many GPUs were used to build DeepSeek, but we know it was a heck of a lot more than we were told. I mean, I don't think that anybody that with like even a little bit of sanity would argue that right now. But these things can easily tell you where they are, and if they're not being used for anything nefarious, we should have rules that basically, has a limited amount of access. We don't need to know the data and the info on it. All we want to know is where it is, so we know where these things went. Just an idea. But you know what? We're arguing aside. Maybe that's what I believe. Maybe it's not. But that's the fun part of the flip, everybody. All right, let's wrap this thing up. Let's go to bulls and bears. There's a lot going on in the market this week. Pat, AMD, did they crush it?
I mean, they absolutely rocked the house, right? I mean, on data center, right? They crushed it with not only Epic, but also Instinct. I would say primarily Epic. I mean, they just kept rocking with Instinct. Client and gaming. I mean, richer mix on client. They sold less processors, but their ASP skyrocketed. I think the kudos out there to Jack Hune. Zen 5 is doing great. And then on the gaming side, this 9000 series is doing really, really well. And the only question that I have is how many can they make, right? Because what happens is AMD comes out with a rocking card, and they cut supply because they're probably not making any money, or Nvidia makes a price cut. But the market share between the two companies, Nvidia has 80% and AMD has 20%. So they could potentially ratchet up a couple points here.
But like, so I think AMD did good, and I shared a couple of posts on this, and I had a lot, look, they're really good results, but like, does it not kind of, it gets my craw that they're not talking more about what's going on with Instinct. It just feels like, I know they did last quarter, they stopped sharing that number, but like, to me, it feels like that is, I just think, like, personally, they get to do what they want, and they're doing really well. These, we know that the hyperscalers are adopting these for inference, and they're getting some good results, Pat. But like, this is like the chest thumping, pounding moment that they're gaining, share. And I feel like pulling that back it's just an interesting decision to me.
Yeah, I mean, look at the uncertainty out there with the way that even Microsoft. Remember, they kicked first half to second half, and you look at the ambiguity with Blackwell and what's going on there. One of the things that I think didn't get discussed enough, and I think people chalked it up to pull-ins, even though the company said that there was nothing material with the pull-ins, is they gained server CPU share again, right?
Yeah, Epic's been amazing.
Yeah, it has. Now, I sometimes question how much of that is going into enterprise SaaS companies versus, what I call true enterprise. But the company did talk about, they're in the top 10 telecom, aerospace, and semiconductors. 9 out of the top 10 car companies, 7 out of the top 10 manufacturing, 6 out of the top 10 in the Forbes 2000. Now, that can mean one rack of gear. It just means it's there. But AMD, first and foremost, is still very much a hyperscaler company. Secondary, a tier 2 CSP, which includes enterprise SaaS and companies like Cloudflare. And they've got a lot of work that they need to be doing to gain more real estate as Intel becomes a factor in 2027. But I think for 25, the remainder, and for 2026, this is AMD's ability to run up the score on Intel in the server market. And, lest we forget, Intel still has 75% of the PC market, right? With not a vastly superior architecture or product.
Yeah, it was a really good. Epic has been epic. Let's just be very clear how well it's gone there. I was very impressed with those results. So overall, really solid. And other three-letter A companies, ARM had its earnings record results. It has first $1 billion single quarter, $4 billion for the year, 34% growth in year-on-year revenue. Pat, its royalty revenue grew mid double digits. Its licensing revenue absolutely crushed it, 53%. And I think as far as clean quarters go, look, their AI work, their, in terms of Grace for the Grace Blackwell, Grace, it really has become the leading CPU. I think they're getting close to half now of all the market share in that particular space. So the cloud side, the data center side, Pat, very, very encouraging results overall. Now, they did take a bit of a whack on the guide. The guide came in really conservative with very low growth on licensing. I thought Renee Haas, I think both of us talked to Renee, managed the call very well, but after having such good results and then kind of saying we're going to be pretty flattish, you managed it well, but it seems like these licensing deals kind of get lumpy, unlike royalty, which the licensing was a little lumpy. They had a big, maybe even some pull-in was why they were up so much in the last quarter. But Pat, ARM, they seem to be really firing on all signals, cylinders. They are valuated super highly. Market really does see it as a long-term growth play. But I thought they did well. Like I said, the guide was just a little underwhelming.
It's so funny. The guide was within projections. It's just analysts want more. They've had double beats the last 4 quarters. It might be 5 quarters. Like, what do people expect? It's at what point are analysts just plugging in the wrong number for them? So business fundamentals are very strong. They doubled the size of the business, Dan, in 5 years. And it's one thing when you're selling a product. When you're selling mostly IP, that's pretty incredible, right? CSS, right? First new auto customer, and CSS is essentially doing all the work aside from taking it to TSMC and spitting out a chip. It's a product. I consider it a service, but it has incredible amounts of revenue and profit dollars. And there is a talk, and I need to follow up with this on do custom cores have better performance than ARM cores? That's been my belief, just based on what we've seen from Apple and Qualcomm. But I know there's a lot of discussion swirling, and I need to go off and do a little bit more research on that. And I know you sent me the meme about V9 slowing down because Qualcomm isn't adopting it. I do believe that ARM with their Edge AI product did move to a V9 product, and I also think that Qualcomm not doing V9 for the current crop of SoCs that are in market doesn't mean that they don't have the license for V9. I mean, nobody really knows. So I think Qualcomm moving to RISC-V for its IoT stuff, where it doesn't have a high-level operating system, makes sense and will likely happen. It's a really harder to do that when it comes to the smartphone. Not impossible, but
I'll
just
tell you this:
harder.
ARM's forward multiple today is over 60. So when you talk about why maybe they're tough on it, I mean it trades at a super high premium. Their trailing 12-month PE ratio Pat's 162. And you compare that around that, AMD's forward is 23 right now with a 74 trailing. Like, so some of these companies are just like, when I talked about like that AI cred, in terms of whether it's the instinct number, whether it's ARM's guide, like I think it's just being perfect because these companies are trading kind of above the average S&P multiples at all times. So they kind of get a little bit of mean reversion when they aren't able to basically be perfect on every part. But it doesn't make the business not stable. Speaking of, not stable, by the way, we are seeing layoffs. Microsoft, IBM, Oracle, a handful of other tech companies. We're not going to drill too much into that today because we got to get to our, we got to get to our, some of our quick ticks on final tickers that I want to run down with you. But it does seem that, I don't know if it's the AI thing, Pat, deflationary tech, efficiency, prone to grow. Companies like Microsoft having great earnings and then doing layoffs. Any quick thought?
I have no thoughts about that. I mean, given the, I'll call it the dynamic to the strength of the company, the power of the company, and the power of the employees, they're using, return to office as a way to do some layoffs. And if they don't need the talent or overhired or think they can get better talent, they're trading up.
Yeah, I mean, look, you make money with more revenue, you make money with less costs. It's all a part of running businesses. But if you can get the productivity and efficiency without the costs, that's just being prudent. Couple quick ticks, Pat. We got briefed over the last couple of weeks. Coherent, Lattice, Astera. Give me the quick rundown.
Yeah, Coherent. The stuff that I think people are missing is the roadmap. That's coming out, whether it's 1.6T transceiver designs, showing 400G EML. That's the basis for a 3.2T transceiver, silicon photonics. I think people are missing that. On Lattice, I don't think people really understood the guide there, right? Which was, well, wait a second, what if something doesn't happen in the marketplace? Oh, but you're not going to, we're being conservative, but we're sticking to there could be risk in inventory in the future, but we're sticking to our quarter. What the heck does that mean? Well, it's very clear. Comms and wireline server are growing with the hyperscalers. You can see the upsides every day, but when it comes to industrial, they're still depleting inventory and therefore not changing guidance. When it comes to Astera, everybody should be looking at UI Link, UA Link, which is essentially scale up. It's the industry standard NV Link. That is a multi-billion-dollar opportunity for the company, and I don't even think the street knows what that is. Like if you're AMD, AWS, Google, Microsoft, and every startup XPU, you're going to be using UA Link.
And Astera tends to rise to the prominence there. Good results. Like it was a very clean quarter. Just a couple of quick adds on what you talked about with Lattice. Look, everything I could see from looking at their revenue charts, margin charts, sales, bookings charts is that it looked like maybe last quarter was kind of their bottom, which is something that, a lot of the chip companies that weren't kind of pure AI plays have had a very rough couple of years. Theirs looks like they're turning the corner. So there was some very good indicators inside of these earnings, especially the bookings to billings ratio going over 1 again, which means they're booking new orders faster than they're shipping. And now that they're kind of past the inventory hurdle, the Coherent one, Pat, I love that company as sort of a kind of a non-traditional thematic as a way to play AI. I mean, they've built this data center communications area. I mean, Pat, their growth and EPS growth and margin growth. I mean, I think they had like 490 bips in margin growth this quarter. I mean, just absolutely crushing it on profitability. And of course, they are sort of one of a very small number of companies that can handle all these data center to data center interconnects. So it's a very interesting play. It's not a name that tends to come up first and foremost when you're thinking about it. But what I heard at Milken was unlimited amount of funds for data center projects. Basically, more capital to allocate than opportunities to allocate the capital if you're in the data center play. Now, none of them know what the killer app is going to be and whether this stuff will ever be consumed. That's what the financiers told me, but they don't care because the building out the infrastructure is so lucrative right now, and there's so much excitement and enthusiasm about it. All right, Moray, we did it. We did the show. We got it done. We're almost on time, just a few minutes late. I'm going to head off and do some corporate meetings.
Nonsense.
I think next week, I don't know. I mean, there's some possible last minute travel, but I may actually not have to leave town. I don't think you do either, right?
No, I am. I got a lot of offers, but it's like I need a week here before we jet off. I think I'm 3 or 4 straight weeks on the road coming up.
Yeah. Well, I wish you all the best with your shoulder. I hope you get big and strong again. Want to just thank everybody out there for being part of our 6.5 community. Thanks for signing up for the 6.5 Summit. It's going to be awesome. Thanks for showing us your bicep, Moorhead. Here, flex it again. Maybe everyone could see it.
I mean,
anyway,
so tiny.
Be part of our.
Not bad for an old guy, right?
You're looking great, buddy. You're looking great. Everybody out there, tell Pat he's looking great. At Patrick Moorhead, tweet him. You're looking great, buddy. For this show, for this episode, for this week, for 6.5, it's time to say goodbye. We'll see you all